We have to talk about the extremely good news for crypto investors right now. If you're invested in this space, check this out. In this video, we're going to look at the Bitcoin price action, also some great data on Ethereum and smart contract chains, plus this. Crypto bills pass congressional committee in huge win for US crypto. This is bipartisan, so the Democrats and the Republicans coming together to actually pass this. Now it goes over to the Senate. We actually may have the world's largest capital market coming and giving some clear rules on cryptocurrency. This is very big for the future of crypto. If you're invested, watch this video and see how it affects the crypto industry. So we'll get onto the Bitcoin price and how it's reacting. There's no reaction in price to this, right? This is very, very big, but the market's not going to pick it up or get excited about it, but it's actually bigger than most people assume because clear legislation is important. Bitcoin is still within this uptrend. We've been watching this for a while. It's still within the uptrend despite some weakness, right? So 32 again, 32 is major resistance. I don't expect that to be broken until maybe the ETF applications get accepted or some other piece of data comes out. It is the target right here at 32, which is really the top for this part of the cycle, in my opinion. However, as you can see, we are still within this uptrend and this uptrend channel has not been broken yet despite the weakness. I would be looking for this price right here around 28,200. See if we bounce from that, see if we reject lower from that. This uptrend, of course, can't just carry on like that in a straight line upwards unless there is huge money printing. And if that happens, we're going to get a big dump beforehand. But as you can see, trading this, we are still within this uptrend despite some weakness. So nothing to worry about as yet. This is the real key, 28,200. Now, on the 13th of August, I believe, or around that date, ARK ETF is either going to be accepted, denied, or pushed back. Like I said in previous videos, I don't expect it to be accepted this quickly. Good news if it is, but I expect maybe a delay. If there is any FUD around this, bringing us down to this 25 level, this is a great level for a short-term trade, in my opinion. We can see that the market is different now. It's going into that recovery phase. And so any drawdowns of 20% plus are typically a very good buying opportunity. That's my short-term trading idea anyway, if we get there. We have to wait for better prices though, because taking longs at this price is not the play. You need to wait for better prices if you're taking speculative longs in this part of the cycle, which is recovery into potential bull in, let's say, 18 months time. If you're a trader though, check out Bybit, up to 30K deposit bonus. You can trade on there. Check the link in the description for the details. I do believe we are starting to see the blocks fall into place for the next bull market, whenever that may occur. Macro is going to obviously pull us around, but in terms of crypto, all of these specific blocks are now in place. XRP essentially won against the SEC, and that was a good result for crypto generally. Now you also have the biggest financial institutions in the world applying for Bitcoin ETFs. Now we have Democrats and Republicans coming together to actually pass crypto bills out of the House. Now it needs to go over to the Senate to actually be made law. I guess that's still a big if. We don't know if it will be rejected or not. But here are the two main things that you need to know. There are two bills that have been passed. The first one outlines a process for firms to certify with the SEC that their projects are adequately decentralized, which would allow them to register as a commodity with the CFTC. This is really big. The SEC, Gary Gensler, has just said everything's a security. Polygon, Solana, Cardano, a bunch of other ones. They're all securities. They're all illegal. If they were deemed a security, the problem is no one can actually use that blockchain because you can't use the base layer currency to pay for gas and do other things within the blockchain, right? Which is obviously complete nonsense that those are securities, right? As long as you can prove that you are sufficiently decentralized and there will be a checklist to go through, then you are a commodity. Important because a gas token needs to be freely exchangeable to pay for gas and to use that system. If it's registered as a security, it basically hamstrings the whole entire industry. That is not correct. This bill aims to correct the actual legislation so that people can use these blockchains properly. The second thing here is the Blockchain Regulatory Certainty Act. Now, this aims to set out guidelines that removes hurdles and requirements for blockchain developers and service providers, such as miners, multi-signature service providers, and decentralized platforms. Important here as well, what they're saying is crypto can exist. These protocols can exist and actually operate within their own framework, because the current rules just simply would have the industry completely hamstrung. People couldn't use the protocols. You couldn't use the tokens and gas tokens to message between protocols. It would make it impossible. So what they're saying here is that crypto can exist if these bills go through. Also, you can see miners, also validators on proof of stake networks. They were going to be classed as money remitters, which again would completely hamstring their business. They would need to follow AML and KYC rules, which is impossible. So this is saying if you're a blockchain infrastructure provider, you can actually go ahead with your business. These blockchains can exist and it's a real use case. So this is very positive. Now, there's going to be a bunch of legislation that isn't great either. But if we have clarity and we can get these two clowns out of the way, hamstringing the industry, it is going to be generally good news for crypto. If we look at some on-chain data as well, we can see that the industry is just starting to find a baseline and starting to recover again after what was a terrible bear market. Now, I'm going to be making some updates for the crypto course here. If you're in the crypto course already, these are coming free for you. Just watch out for them. I will put some messages in the private Discord groups as well when the updates are coming. It's a huge time now because we're very close to the Bitcoin halving. So there's going to be a lot of narratives forming. We also have the Ethereum ecosystem exploding with layer 2s. I'm just going to update a bunch of research on both of those ecosystems, plus where we are in the macro cycle and how, the crypto industry is evolving. If you haven't got the crypto course yet, check it out in the description. 300 videos and the updates come for free for everyone in the course. So check it out by the link below. But as we can see here, Bitcoin price is really just a barometer of what's happening in the economy. And so when Bitcoin prices start to pick up as well, you can see crypto start to recover. Now, according to Crypto Quant here, Bitcoin is still in a bull cycle. Approx 71% of realized cap is unmoved, so that's over 6 months, indicating low selling pressure from long-term holders. Now, what I want to highlight here is really the cycles that Bitcoin goes through, where essentially we have a lot of the realized cap being moved at peaks in the Bitcoin price. So as an investor, obviously you want to take advantage of low prices, given that you fundamentally assume that the networks are growing, right? So Bitcoin just is growing as a network. I think it's growing, let's say 30% plus per year in terms of, or per cycle, 30 to 50% per cycle in terms of active addresses. That's from my research anyway. Since the last bull cycle, the active addresses are up, since the last bear cycle, active addresses are up around 30 to 40%. So that's a growing network from cycle to cycle. And so if you can invest in a growing network, when prices are low, you're going to get some good returns. So very simply, these cycles are when prices are very high, the network price has got away from the fundamentals, right? Too much to the upside. Now that's when long-term holders are actually encouraged to move their coins and sell. Now during bear markets, you can see long-term holders are not encouraged to sell, and so they just hodl their coins and they wait for the next cycle to come. So we've just seen this cycle play out. So every previous cycle, we have a huge rise in realized cap, right, of unmoved Bitcoin. Bear market for the price and a bull market for hodlers. Now, as the price reaches an all-time high, you get a huge drawdown here. People are encouraged to sell because they've just made, percentage gains, which have been incredible. Now, during this bear market, we can see a rise again, and then during the all-time high, a massive drop. During this bear market, we see a massive rise again. Hodlers are just saying, look, this price is not great. I don't really want to sell here if I don't have to, right? I'm not going to capitulate. And so we can see that has peaked, and now we're moving down again. So prices are obviously volatile, but as you can see, this cycle has changed now. And so we're going to go through that as people are kind of more incentivized to sell. We are nowhere near a peak though, right? So I think what we are in now is consolidation or a recovery from a bear market, nowhere near a bull market. I would be nowhere near incentivized to sell at this price. That would be during massive peaks in the price where you can see most hodlers do take some profits, but we are coming out of that bear market. It's going to be rocky, but prices are still definitely not overdone in terms of where they are now as to most cycles. The growth phase is coming back, and so we're only just at the start of that now. That cycle for Bitcoin, you can use many different metrics. You can use MVRV and a bunch of others. They all show the same thing, which is the absolute capitulation seems to have finished and we're recovering. Now, we don't know what the recovery is like. You have to look at the macro and it's still very uncertain, but that capitulation has finished and there's just progress coming to the market. This is a growth market with adoption coming. So let's look at Ethereum as well, just to show some of this. Actually, this is, I believe, proof of stake blockchains, the major proof of stake blockchains. This is Jamie Coates from Bloomberg. So this is Q2 2024, and it's compared to the second quarter of years previous. So daily active addresses, as we can see, higher than all previous years. Now, this is just Q2 of this year, so it's not a yearly year-over-year metric. But we have daily active addresses which are still growing. So that's obviously good news. Now, this is a fundamentals dashboard from Bloomberg. It gives us a bunch of different information. And I think the important parts here is kind of active users and also the amount of profitable blockchains and protocols that are coming. We can see we're up 23% from Q2 last time. 5 million active addresses. So you can see the growth here is back in 2020, you had 285,000 active addresses, up to 2.5 million, 4.1 million, and now 5.1 million. Not massive growth. It's not the top of a bull market, right? So again, you're seeing a slight recovery. Prices have slightly recovered. Still a good time for me, in my opinion, to invest. When the bull market is crazy, that's not the great time to invest, right? That's the time to think, okay, are things getting overdone? But for right now, we're seeing the slow grind of growth over time, despite the bear market. Daily transactions have, continued to rise. So in 2020, 14.5 million transactions, then 23.5, 38.3, and now 46.1 million transactions over a 90-day average. What I want to look at is the amount of profitable blockchains and applications, which again is basically nothing. So we are still way, way early in terms of revenue generation and, assets that can actually wash their own face and produce yields for investors. Because I think that's how they're going to be valued over the long term. Bitcoin is different. It's way different. It's global property money with no yield itself. These smart contract chains charge fees, and because they're proof of stake, they pay a yield. And so they're going to be valued on the yield that they produce. And so the ones that produced in some way the most yield should rise to the top over investment time horizons. Profitable blockchains back in 2020, there were 2, 3, 4, and now 5. Just 5 profitable blockchains. Profitable applications, 0. Again, I believe this is fees generated minus any token incentives, which I guess would make them not profitable. Something like Uniswap is massively profitable, but the token doesn't generate any fees, and so they don't have a fee switch turned on yet. So you own the token, you get nothing back, essentially. You're just hoping for that in the future. So no profitable applications. In terms of fee earning protocols, as you can see here, massively higher. So in 2020, you had 8 crypto protocols that earn any fees at all, up to 32, up to 64, and now 160. So what you're seeing is a slight maturation of the asset class and of the technology, where there are some protocols that can actually earn fees. Now, according to Bloomberg, none of them are passing any of that yield in a sustainable way back to investors. Now we can see Jamie's conclusion as well. Despite the bear market, the crypto ecosystem has expanded on network adoption. Whilst growth has been slowing year over year, advancements in UIs, falling transaction costs, and a bit of regulatory clarity is paving the way for mass adoption. So crypto ecosystem active addresses is climbing, and all the TVL metrics do very well when the price is high. But I think that's not really good to focus on. Just focus on active addresses, users, and growth. As long as that's going in the right direction over time, the assets that can best monetize that are obviously going to win. Strong fundamentals are absolutely necessary for the next bull market. Without that, you just don't have anything. But it shows that the industry is growing even through this bear market, which is important. What we can also see here is that the stablecoin liquidity ratio is falling off. The market is still extremely tight. There isn't a lot of cash flowing around, and certainly central banks don't want to flush the system with cash. When they do, that's a real bull market. We're nowhere near that now. And so despite good fundamental growth, what we should be seeing is prices not reacting like they would in a bull market. Now, that's good news for investors that actually want to accumulate and buy at lower prices. We are in the accumulation recovery phase, in my opinion, not in the bull market yet, which is good news for investors. When we are in the bull market, I will be making videos saying things are overheated and, worrying about where it's going to go next. But for right now, that part of the cycle, the upwards part, is still ahead of us. It's just a matter of when and not if, and how we get there, which is obviously uncertain. But I think the destination is becoming more clear when it comes to crypto. Now, if you want to know more about that, all the videos that I'm updating the course with this month are going over that, some timeframes and some strategies as well on how to play that. Check that link in the description. Also, if you're a trader, deposit bonus to buy a bit up to 30K. Check that link as well. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.